Hello traders, I'm Cory Mitchell with TradeThatSwing.com. In this video we are going to look at the historical returns of the Nasdaq 100 index, or the QQQ, one of the most popular ETFs based on the Nasdaq 100. While I say average returns here, we're actually talking about annualized returns. Average would be when you just take the average return each year over many years. Annualized means you're taking the actual starting point and ending point and computing the compounded amount that the price would have to increase each year in order to get those starting and ending points. And we can see here the summary sheet. So over the last 25 years, including dividends, and with dividends, of course you're getting the dividend anyway, but with dividends means you're reinvesting the dividends so that those dividends compound. And if it says no dividends, you of course still got the cash if you were invested, but you just took it out, you didn't let it compound, you went and spent it, whatever. So you can see a little bit of compounding difference over time. So the last 25 years, 8%, just over 7% if you just took the dividends. Much better over shorter time frames. Last 20 years, 15% returns per year, 18% over the last 10 years, 18% over the last 5 years, 17% over the last 3 years. And a lot of people complaining about the market lately, but it's actually been pretty good, up 13, 14% over the last year. This is from June 12th. There was 1 day left in the week, so these dropped probably just a tiny bit because the QQQ was down about a 1% or so on June 13th. But for long-term averages, we are still in this ballpark. Since 1985, so 39 years, the return is 13.97%, and that does not include dividends or reinvesting the dividends. That's simply based on the index, which is based on the price movement. So yeah, still really good return. Of course, that would even include the 2000 tech bubble collapse. We'll look at the long-term chart of that. This shows the power of compounding. Just, if we invested a little bit each month, or even a chunk over time, that compounding at about 13% for the Nasdaq would really escalate over 10, 20, 30 years. Let's look at the biggest up and down years. When you see those kind of numbers, you think, oh, okay, making 13% a year is great. I'll just, expect my 13% check each year. That's not quite how it works. You can see some really big up and down years here. So down years, 2008, we were down 42%, 2002, 37%, 2000, 36%. So some really big drops in certain years, but then you get the flip side of that. Up 100% in 1999, up 85% in 1998. Following these crashes, so 2000, 2001, 2002, really bad years, all down like 30%. But then you have 2003, up about 50%. 2020, that was a good year, up 50%. And some of these other more recent years, up 39%, 2019, 2017, up 30%. So you get these, this is where you kind of get that averaging out, where we basically end up with 13%, but the road to get there can be extremely choppy. This is returns by year. So you can see some really good years, 2022, boom, down 32%. The next year up 56%. The year before that, big drop, up 27%. So you can see the, big volatility. 2007 up 19%, 2008 we had the big drop, minus 40%, 2009 big bounce back, 54%. This chart kind of breaks it down in terms of percentages. This is a 1 week chart, and we basically start out way back here in 85, rally, we have a 40% decline followed by a big rally. And this is only showing 30% or greater price moves. So any of these little wiggles less than 30%, not included. And you can see here during the 2000 collapse, big drops followed by pretty big rallies, 50, 60%, but then followed by another 40, 50% decline. Total decline here, all this chop, 83%. Then you have a very long period following the 2008 financial crisis where prices rally for a long time. We didn't get a 30% drop till 2020. Nice rally after that. Then we got another one back here, and we've rallied since, haven't had another 30% decline in the Nasdaq 100 index. So that just shows the long-term average. This, or what the long-term chart looks like. So it's not all rainbows and kittens where you're just collecting 13% every year. It is a lot of up and down. If you're investing for the long term, you want to decide, is this something I'm capable of handling? Am I going to panic out? Those sorts of things. How are you going to handle these times? Because it's going to be hard to time. We don't always know when the big decline's coming. Some of these look like bigger declines where price just chopped around but then ended up resuming higher. And so, yeah, got to decide how you're going to handle these. So that's how the Nasdaq 100 and the QQQ have performed, and hopefully that helps you out with deciding how you want to invest and trade in it.